We'll get started in just one moment, everyone. There are people joining by the second, so we'll get started in just a minute. So if you aren't one of our speakers, if you could mute your phone, that would be great. Hello, everyone. My name is Brian Herstig. I'm the president and CEO of the Jewish Federation of St. Louis, and I want to thank you all for joining us today to talk about the opportunities made available from the Payroll Protection Plan, the PPP of the CARES Act, and other things as they come up. First and foremost, I want to thank Don Hannon, the COO of the Jewish Federation of St. Louis, and his staff for getting this information and webinar together in a really short time. Our parent organization, the Jewish Federations of North America, has really been on top of this since last week, pulling together resources and experts. And quite frankly, we're largely stealing a lot of their work, which they gave us permission to do. I'd like to acknowledge the United Way for their support and help getting the word out, and thank David Witten of the Witten Policy Group for keeping us up to date and representing us with and to our elected officials, both locally and nationally. So we do have a number of guests or representatives from their offices joining us today that I'd like to recognize really quickly. Senator Hawley's office, Congresswoman Wagner's office, Governor Parsons' office, Lieutenant Governor Mike Kehoe's office, Senate President Pro Tem Schatz's office, Senate Majority Leader Rodin's office, Senate Minority Leader Rizzo's office, Senate Appropriations Vice Chair Hoff's office, Speaker Har's office, Majority Leader Vescovo's office, Minority Leader Quaid's office, and St. Louis County Executive Page's office. The last thing I'd like to do really is just acknowledge and thank each of you. We started putting this together and are doing this so that nonprofits could be prepared for and take advantage of a one-time opportunity to get funding in order to hopefully help us through the next 60 days of this crisis. We wanted to do this because, like you, we are on the front lines of this situation. We are working harder than ever with fewer resources and more uncertainty. And we're doing it to protect our community, just like all of you. So from one grateful nonprofit executive to all of you, thank you. Thank you for your work and dedication and sacrifice at this time. It is so, so appreciated. With that, I'm going to hand it over to Don.
Thank you, Brian. I'm going to try to share my screen, so give me just a second here. All right, does everybody have it?
Yes, we
okay.
do.
So again, thanks, Brian, and thank you to everyone for participating in this video conference. As with no good deed goes unpunished, we do have to put a disclaimer. Oops, I'll put the disclaimer there. That of course this is for informational purposes and not be construed as legal, financial, or accounting advice. I think everybody, it's a pretty standard, but I do think it recognizes the fact that this has been a fluid situation and a lot of information is changing. I know a lot was clarified last night, and hopefully we'll be able to go through some of that. So we realize there's been a great deal of information about the CARES Act and the Paycheck Protection Program that's been distributed over the last several weeks. Our goal is not to replicate that information. Our focus is on the Paycheck Protection Program. We hope to do this in a simple way by walking through some initial questions and then answering as many questions as we can within the next hour. After we go through a brief presentation, we'll open for your questions through the chat function of the Zoom application. You may submit your questions and I will read them to the panelists for their response. We realize it is likely we won't be able to get to everyone's question. We will record all the questions and put together a document with all the questions and answers within the next 24 hours. That document, along with a recording of this video conference and a fact sheet, will be available on the Jewish Federation website at jfedstl.org. Let me introduce our panelists. We're really fortunate to have a great group of panelists who I'm sure haven't been sleeping much lately, but have been really studying and paying attention to this rapidly changing situation. Let me switch that over. There we go. Sorry about that. We're pleased to have Jeff Sparks, partner at Reuben Brown, David Killian, a principal with Brown Smith Wallace, Brian Phillips, vice president and SBA loan officer for U.S. Bank, and Kate Dana, a nonprofit consultant of Wendy Dyer Consultants. Kate's been real helpful with us on a lot of projects, and we thought it would be great to make her available. With that, I want to hand off to Jeff, who'll get us started.
Great. Thank you very much, Don. And I just want to say thank you to everyone on this call for the important work that you do for our community. It's a privilege, truly is a privilege to be able to speak to this group because you guys all do so much work for our community on a day in and day out basis, and especially right now during this very trying time. So as was previously mentioned, the CARES Act is a massive bill, and it's one of several bills that have passed in the last few weeks related to COVID-19. And just one piece of that is the Payroll Protection Package loans, and you'll see it abbreviated as PPP. I want to first start off by noting that there are several different loan options in the legislation that's passed over these last several days, or over the last, I should say, several weeks. We're only talking about the PPP. We are not talking about the SBA disaster loans, also known as EIDL. Those are a different program, and there's other different programs. So try not to confuse those different programs and realize that there's multiple loan programs out there. So today is about the PPP. As noted on the slide, the government is backing these loans, even though you'll see you're going to go to a bank, an SBA lender generally, or a credit union or another financial institution to get the loan, but they're being backed by the government. And this legislation is really intended, or I should say this part of the legislation is really intended to be able to help you keep your employees on the payroll and keep your doors open. If you could advance the slides to the next slide, I would appreciate it. You'll see here we list several key questions that we're going to consider on today's webinar. I will tell you this is an extremely high-level overview of the PPP, and I would very much caution you don't go out and apply for the loans thinking you know everything after this 1-hour webinar. There's a lot in the detail. We're going to stay high level, but you really do need to consult your advisor to get more detail on it. I will note that if you're looking for more detail on the PPP, or for that matter, anything in the CARES Act, Reuben Brown, my firm, we did host a 2-hour webinar yesterday that went through everything in much more detail. And you're welcome to view a copy of that webinar, as well as the PowerPoint slide deck that summarizes it on our website, reubenbrown.com. As we work through the questions here, we'll stay high level, and then obviously we'll take questions at the end. And also want to note a lot of the rules and the guidance around the PPP that we're going to talk about is changing on a daily basis. Just last night, more information came out, and we're working to incorporate that into today's presentation. So we're still learning as the SBA and the banks and the government releases more information. If you want to advance the slide one more, I would appreciate it. Sorry, Paul. Oh. Okay, we should be on this, sorry, can we go back to the slide that says, can I get a loan? It's slide 6.
Yeah.
So who would qualify for these loans? Thanks to a lot of the lobbyists that work on behalf of our different organizations, nonprofits were included within the qualifications. And it's not every nonprofit, it's only 501c3s, which, as we know, that covers most nonprofits. You can see on the slide here some examples of those, but you do need to make sure you're a 501c3 nonprofit to be able to qualify. The other part is you need to be under 500 employees. And how you measure that 500 employees, how you consider temporary workers versus full-time, what date you measure that, the rules get complex. and we're not going to go through all of the complexity of measuring the 500. So if you're around the 500 mark or you have a lot of seasonal people, you're going to need to take that offline, or maybe in the Q&A we can get there. But for now, know if you're well under the 500, you're fine. If you're well above the 500, you're out. You could probably hang up now. But if you're around the 500, you will want to get more guidance on how that 500 is measured. And at the very bottom of that slide, I'll also note it does say on the slide here that if you don't have a 501c3 charter, you could still apply. I would advise you to check with your legal counsel on that. I'm not going to get into that today. And if we could, before we advance, actually, one other thing I want to mention that isn't on the slide that's extremely important. Just because you're eligible to apply doesn't mean necessarily that you will get the loan. And I'm going to read for a moment out of the legislation because this is extremely important here. In order to qualify, in addition to being a nonprofit 501c and being under 500 people, you also have to sign an affidavit stating the following, and that is the uncertainty of the current economic conditions make the loan necessary to support the ongoing operations of the borrower, and the funds then will need to be used to retain workers and maintain payroll or make mortgage payments, lease payments, and utility payments. So what I really want to emphasize there is that the current economic conditions need to make the loan necessary to support the ongoing operations of the borrower. We don't have great guidance on what that means, and we're getting a lot of questions. Right now, we're being told it's up to the individual bankers to help interpret that when they decide if you qualify. And I know our U.S. Bank friends on the line will hopefully talk about that in the Q&A. But that's another thing is it's not every nonprofit. You got to be affected by the disaster. And, that definition is broad, and it will come back to working with your bankers on how you fit in there. If we can advance one more slide. Perfect, thank you. How much can I get? In general, the calculation is 2.5 times your average monthly payroll cost. However, if you haven't been in business for 1 year, because you'll see there it's in 1 year average, there are special rules again to help with that. You can see here what makes up payroll cost, and it's important to note that if any employees are over $100,000 in payroll cost, their excess over that $100,000 won't be considered in the calculation. However, we do believe, and this is up for interpretation, but we do believe if they're getting, let's say, $150,000 in compensation, the first 100 counts, it's just their last 50 that doesn't count. And it excludes employees outside of the US. Let's advance one more slide and we'll go to an example of that. As you can see here, in this example, our monthly payroll is 1.5 million. So, our annual payroll is 1.4 million. So therefore our monthly payroll is 116,000. And there's some notes at the top of that slide as well to make note of. So then we back off the amount of payroll that we relate to people over 100,000. So in this example, in the middle of that slide, you'll see we have 3 people that in total their payroll is 460,000. So the first 300,000 count, the next 160 doesn't count. So you back off that $13,000. And then we're also going to back off people living outside the US. And we get to our total eligible monthly payroll. We times that by 2.5, 250%. And you get to the amount of the loan that you can apply for, $239,000. Again, this sounds pretty simple, but there's a lot more detail behind it that you'll want to get help on as you actually work through the application. But high level, this gets you to where you need to be. And if you want to advance one more slide, I'll turn it over to the next presenter. Thank you.
Okay, David, you're up. David, you there?
David, are you on mute, maybe? We can't, David, you're on mute.
You're on mute, David.
David, you need to unmute yourself.
There you go.
There we go. Yeah, sorry about that. It said the host had me muted, so I apologize. Thanks, Jeff, and thanks for everyone giving your time today for us to hopefully shed a little light on these programs. And along the lines of Jeff's comments, we're going to try to keep this high level and not get into the details. So to start, what can I use these funds for is really the next question. And this goes to eligible expenses, and where you'll see this flow into in the presentation is really in the context of forgiveness, which is a very favorable portion of this act, and I think the reason why so many people are excited about it and approaching it. So two buckets here we have on the slide: payroll expenses. That would include things such as salaries and wages in the payroll side, as well as payroll support costs and benefits. From an operational standpoint, we're looking at mortgage interest, rent payments, and utilities. There's an important cutoff date in here. In the legislation, it's often referred to as the covered period. What we're looking for is that from an operational standpoint, services, enforcements, or leases have been in place prior to February 15th of 2020. So that's an important date to remember for really a lot of the provisions in here. And then if we want to skip forward to the next slide, we'll get into forgiveness. And as Jeff mentioned, we're going to answer some questions. So as we get one-off questions, either here or offline, the definition of payroll costs, payroll support costs, and benefits is it's a gray one, but one that we're doing our best to answer as concretely as possible. So from a forgiveness standpoint, this again, there's a couple tests in here. One is a head count test. So have you maintained your head count? The second one being a payroll cost-based test. Have you reduced salaries and wages by more than 25%? So those are really the two bright line tests in the legislation that came out yesterday, and some of the guidance. They tried to keep it really high level. I like the discussion, and essentially what it says is your loan forgiveness will be reduced if you decrease your full-time employee headcount. Your loan forgiveness will also be reduced if you decrease salaries and wages by more than 25% for any employee making less than $100,000 on an annualized basis in 2019. So big picture, without getting confused by the calculations, those are the high level aspects of it. There is one question coming up frequently regarding rehires. So the legislation says that any changes you made from a salary level or headcount standpoint between February 15th of 2020, April 26th of 2020, you have until June 30th of this year to restore payroll levels and headcount levels. So for our viewers who have made difficult decisions in terms of headcount and wages, who receive monies for these programs, you can restore those levels. And if you do so by the end of June 30, you should not be impacted from a forgiveness standpoint. I think we have a quick example here if we want to advance to the next slide. So here is our example, the forgiveness calculation where we break out the bucketed costs essentially of what we have with payroll and payroll support prorated for that $100,000 person or persons, group healthcare benefit costs and insurance premiums, as well as mortgage interest and certain utilities and rental expenses. So what we have here is I believe in this example, what we're trying to reflect is that for the 8-week period following loan issuance date, we have spent $250,000. Back to the example that Jeff explained, the loan amount was at $239,583 in our example. So what this is saying is we have received X dollars, we have spent the $250,000. Maximum amount eligible for forgiveness, which can't exceed the principal amount of the loan, is $239,000. So absent changes in headcount or payroll levels, that would be our reasonable expectation for the amount of the loan that can be forgiven. Next slide. I think we're ready to move on from forgiveness. So here is essentially what I can do to get ready. I'll touch on this quickly, and then I think Brian from US Bank has probably a little bit more guidance on this one, but now is the time to act. These applications will be eligible starting on Friday, April 3rd, for two groups of individuals. That's really the bulk of business owners, and then independent contractors will be April 10th. So now is really the time to act on this. We have been encouraging folks to be in touch with your lender, since this program will go through SBA approved lenders, and make sure that interpretations are consistent on the guidance, as well as reviewing debt covenants, as it says in here, internal governance procedures, and really working on that monthly payroll cost. So that's what can be done to get ready. We've got some information requests, I think, that our banker friends can provide as well. But at the end of the day, this is something that is going to start on Friday. So we're encouraging everyone to get moving and be ready. And I will turn it over to Brian.
Thank you very much for having me today. I want to talk about, how to apply. What do I need to do? You can go and apply with any existing SBA 7 lender, or through any federally insured depository institution, your federal insured credit union, or even your farm credit system institution that is participating. Other regulatory lenders will be available to make these loans once they've been approved. So check with them to see if they're approved for this process. You should consult with your local lender to make sure that they're participating in the program, because not all lenders will be participating in this program. The thing that we want to make sure that you are aware of is that it is going to be a situation where you have to apply. There's a paper application out there right now on the website, and some of the institutions like US Bank are going to have digital applications. So according to that link right there, that puts you in a queue, so that when the application goes live on Friday, you will receive an email that will give you a link to the application, so that you can immediately apply at that time. SBA, you have to be a preferred lender, and right now there's only 1,800 of those currently in the United States. So make sure that when you're contacting your local lender, that they are going to be a preferred lender. Some lending institutions will only be using their current customers, and some will not, so make sure that you check on that as well. And then based on that, just making sure that you get in the queue as quickly as possible, because this money is going to be running out pretty quickly. As anticipated, the first week for US Bank, that we're going to receive 10,000 applications. So with that, that's what I have, and I'll pass it back.
Very good. Thank you, Brian, Jeff, and David. We're now ready to take questions. What I ask is, and I will do the best between myself and Kate, we'll do our best to monitor all the questions and get as many in as we can. We ask that we try to, if a question's going to go too long, we might have to limit to it, but to try to cover as many as we can. So if you have any questions, and I see some are already coming in via Zoom, please do that, and I'll go ahead and read them. We did get a few prior to the meeting, and I think we'll use those to get the process started. First question, and I'll give it to Jeff. Regarding the $100,000 limit on compensation, does that limit apply to salary only, or does it include health insurance, pension, taxes, etc.?
Sorry. Okay, so that's a great question. The $100,000 limit would apply to all of those buckets of compensation, essentially. So your wages, your commission, your salary, your retirement payments, all of the items for that one person get added together and then compared to the $100,000 limit. That's a question that we've seen out there. We have seen some inconsistent answers, but that is our interpretation, that everything comes together when you look at the $100,000 per person. David, if you've seen a different interpretation, please speak up.
No, I have not, Jeff. That's exactly the advice we're giving to all of our clients along the lines of the 100,000.
Okay, thank you. All right, David, while you're on the line, we'll go ahead and ask you a question. Can you
Sure.
clarify which taxes should be included in calculating payroll? I know there's been some confusion about that.
There has. So on the legislation and the most recent guidance, the verbiage is state and local taxes assessed on compensation. So what we are advising our clients to include in that calculation is going to be the employer portion of those taxes and not the employee's withholding of taxes. So that is our interpretation of it. And, you know, along those lines, Jeff, I don't know if you've seen anything different, but that's our advice.
I would generally tend to agree. We're a little hesitant on that question as well. And so
Agreed.
ask your banker when you go to fill out the application, or always confirm with your lawyer, but in lack of a better answer, I would agree.
Yeah. And Don, can I add something real quick, just at a
Sure.
high level?
Yeah.
With the speed that this is coming out, and Brian, please jump in. We're advising our clients to be in contact with their lender as it relates to the interpretation of this guidance. My understanding is that the lenders will be reviewing applications, making lending decisions based on applicants' self-certifications. And that also goes along the lines of forgiveness, which is an important factor. But, you know, I'm really encouraging everyone to make sure that the applicant and the lender are in lockstep with how they're interpreting these rules, because I think at the end of the day, they're going to be the ones to look to make sure that we're really understanding this correctly.
Hey, David, this is Brian. Yes, I would absolutely agree with that. There's a lot of interpretation for each financial institution to make their own decisions on who gets the loan and who does not get the loan. So definitely reach out to your financial institution, understand what their requirements are going to be. That might be above what the SBA is requiring, so that they can ensure the best ability to get approved.
Guys, those are great points. I just want to piggyback one item off of that. Is we fully believe, and Brian, correct me if you believe differently, that 3 different lending institutions could come up with 3 very different decisions. So, you know, if one lending institution tells you no, and you thoroughly believe you should be qualifying, we do believe it's acceptable to talk to another lending institution as well, because they could have different decisions on it. I'm not suggesting you shop lending, but didn't want to point that out.
Well, Jeff and I would have to absolutely agree with that situation, that there can be 3 different types of interpretation, and 2 people could say no and the other one could say yes. So absolutely.
Okay, thank you, guys. Question about Medicaid. Our not-for-profit receives a small amount of reimbursement for therapy services from Medicaid. Are we excluded from PPP? Anybody?
That's a pretty detailed question that I would suggest you take offline with your individual counsel. I'm a little hesitant to get into that one here.
Okay. David, any thoughts?
No, I think I'd agree with Jeff. You know, it's tough to not give an answer and say, I don't know, but I think out of respect of being wrong and leading them down a path that doesn't work, I would suggest they speak with their counsel, as Jeff said.
Okay, thank you. Question and so the question that we got, and I'll leave this one. Kate, I'll give Kate a chance to answer one. I know we're talking about Paycheck Protection Program, but should some organizations be considering the Emergency Economic Inquiry Disaster Loan Program? I understand that's a part of the CARES Act too. I know it's beyond PPP, but I think the questions come up.
Certainly, there's, as everyone mentioned, there's a number of options available under the Act. The PPP seems likely to apply to most organizations, but especially if you're an organization with a significant portion of your revenue from earned revenue, or if you're a humanities and arts organization, you are essentially, the PPP is offering 8 weeks of relief. And you are going to be hit much harder given what we know about how giving follows economic downturns, and probably for a longer amount of time. So, or if you have a large outstanding debt obligation, there could be a number of circumstances. I would definitely talk to your CPA about that. It's a 2.75% loan. That's the EIDL option. I'm sure, Jeffrey, I think you said you have had some interaction with this here too.
I can comment on that for just a moment, but that is a separate topic, and I know we want to keep today's call to the PPP. But last week, we spent all of our time on those SBA disaster loans, EIDL, EIDL. And then this week, I was like, boy, I wasted a lot of time last week. I wish I could get that time. And I say that jokingly, but just because this PPP is so much better in a lot of cases. However, there's still clients that will want to go the EIDL route. And you really need to think about, there's many different options here, and you really need to think about that with your individual advisor and what's best for you. One quick point that I will mention is there's a lot of talk right now in the industry, and even I think me and Brian were emailing about this offline this morning. Can a customer, a nonprofit, do both the EIDL and the PPP as long as you're not double dipping and using both loans for the same thing? There's a lot of talk right now. There's not a lot of answers in the order in which you apply for those as well. If you apply for the EIDL today and you apply for the PPP today, could that cause a problem? I don't want to get into all of that right now because there's not definitive answers out there on a lot of it, but it is something you should consider with your individual counsel as well.
Okay, thank you. Little clarification around the number of employees. What date do you use, and should it be only full-time employees or part-time as well? Part-time, how do you calculate those numbers? It might be a longer answer, but can anybody do it quickly?
I'm happy to cover it, but I can't do it so quick. So I'll give my best, quickest at it. First of all, you define, and I'm going to read straight from the guidance. The definition of an employee is you take the average number for each of the pay periods for the preceding 12 calendar months. If you haven't been in business for 12 months, take the average number for each pay period you've been in business. And the SBA does count all individuals employed on a full-time, part-time, or other basis. These include employees obtained from temporary employee agencies, PEOs, or leasing companies. So it's a pretty all-encompassing definition, and it's over the last 12 months. I have, again, seen some people out there say it's not over the last 12 months and some different interpretations there, but you'll want to talk to your lender. But in general, I'd say it's the average over the 12 months, including all people, including part-time and the seasonal. And there are a few other exceptions on the seasonal side, but I'm not going to get into that right now because that's
Okay.
Jeffrey, I've also gotten a question about what constitutes the preceding 12 months. Is it the preceding 12 months from the date you apply, from the date the CARES Act was passed? Do you know? I've had that question come up several times.
I think that's a great question for your lender. So let's see, Brian, would you mind chiming in on that based on your thoughts?
You know, we have not received that information from the government as of yet. And actually right now, our group is having a conference with the SBA themselves to kind of get some of those clarifications today, and I can get that back to you after I find out.
Yeah, great.
That'd be great.
Thank you. And we'll all the materials we get, we will put on the jfedstl.org website later today. Question, how should a parsonage be handled in the calculation? Anybody know? Thoughts? It's another detailed question, but one that may apply to religious institutions. Any thoughts?
Brian, do you want to take that, or do you want me to?
Yeah, go ahead, Jeff.
I would say that's, again, a very unique situation and based on some interpretations of reading the rules. So while we've been talking to clients one-off about that, I'm hesitant to give a definitive answer on this call. Only to say I think it's based on your interpretation of the rules and talking to your lender that you work with. You know, and I think right now the big thing to consider too is we're getting a lot of detailed questions, which is great. But right now, the biggest thing is get your rough number, call your lender, get on their list, and then next week we're gonna have a lot more information. I mean, it's like coming out of the fire hose right now. We have a lot more information,
Yeah.
and you can
All right.
find stuff
All right.
next week. Don't worry.
Another thing about that, about getting ready is, and I know, Don, you mentioned this earlier, but most nonprofit bylaws have a provision that prohibits lending without some sort of action by the board. And so you may need to get your board together in the very near term in some fashion to have a resolution passed that lets you do this. And that can take some time, so.
That's a great point. And also review your current debt agreements if you have any. Some current debt agreements could forbid you from taking out new debts without their approval. And if this is with a different bank or with the same bank, you need to make sure you're coordinating on any current agreements in place.
Right.
Hey, Jeff, can I take that one real quick?
Yeah.
Yeah, so that is one of the things that have come up several times for us at US Bank as well. And we are evaluating that process as well, because this is an idea of getting this money back into the community. So each individual financial institution is going to have to make that determination on their own. So that's not going to be a blanket thing across the board. So definitely make sure you talk to your financial institution to see if that disqualifies you from getting this lending.
Okay. Thank you. I have another question. Is this program for not-for-profits only? No, it's also for businesses, and we're just focusing on the not-for-profit piece of it today because it is such a new thing for us. I did have a question. So I saw one of the questions on, again, I got an email. I saw in the materials that came out last night, the clarification. Is there now a 25% limit test on operating expenses?
Yes, there is. That's something that came out of the legislation is that 25%, depending on how you slice it up, it's either 75 of one piece or 25 of the other, but they are limiting those occupancy costs that were on one of the slides I presented not to be in excess of 25%. So they want 75% or more to be payroll related.
Okay, thank you. Will operational costs include payments on loans for equipment purchased? I think it's the interest only, isn't it?
Yes, it is interest only. Jeff, I don't know, or Brian, where you guys are at on this, but some initial guidance had interest on other debt obligations bulleted out. I am not seeing that on the PPP borrower information that has come out in the last 24 hours. Where are you guys at on interest obligations on other debt?
This is Brian. We are waiting on that one to be given to us in direction or derivatives from the government right now, because that was one of the things that it was touched base on our call today.
Okay, good, because that was in there and now it's not, and so I'm scrambling for an answer as well. Thank you.
Sure, thank you. Question that I would imagine a lot of organizations are facing. Can you use the loan to increase hours of a part-time employee or hire additional full-time employees to assist with the additional work due to the pandemic?
That's an interesting question. I don't see why you couldn't use it to hire additional employees. However, I'm going to counter that with going back to the sentences I read off before about the affidavit you have to sign. And it does say that the funds will be used to retain workers and maintain payroll or make mortgage payments, lease payments, and utility payments. So based on that, and the loan being to, make sure your organization basically can continue on going in these tough times, I think you get into a tough spot there based on the interpretation. And again, I think that comes back to a conversation with your banker and your lawyer to really land on that one, just based on the affidavit you have to sign. Brian or David, other thoughts on that?
No, I agree. I think I think some of the misperception that a lot of applicants out there have is that this is a free money grab. And I have been cautioning as many people as possible to say that you will be required to certify exactly what Jeff explained earlier, that these monies are needed to sustain your business. In some of the guidance that came out, there's a sentence in there that is tacked onto the personal guarantee portion, but it essentially says that if the proceeds are used for fraudulent purposes, the government will pursue criminal charges against you. Some of the governmental organizations are already putting together task force to look for fraudulent uses of these funds. So to me, if you are in the position where you are growing your workforce, I would strongly advise you to speak with your legal counsel on whether or not you apply for this, and if you are misstepping or misrepresenting yourself by signing that certification.
Okay, thank you.
Back off that for a second, if I could, with a question for Brian, if I'm allowed to do that. So I've been getting a question quite a lot over the last few days, and that is, okay, well, my organization's having extreme trouble and everything we've talked about, and they would definitely, be in that bucket. However, we just so happen to have 10 million, I've been dealing with more for-profit, but you can take the same thing in a non-for-profit. We just so happen to have an endowment of, $50 million sitting on the sidelines that is unrestricted use of it. So while my organization is, trying to, we never want it to happen to our endowment, but it is unrestricted. So, do I qualify because I do have this other cash I could go to? Well, I don't want to do that. I do have it there. And I keep getting that same question. And we're telling again, you got to talk with your banker and their interpretation of it. And you got to talk with your lawyer. But Brian and then David, I'm curious if you have other insights, because I think that might be a common question we're going to get from our non-for-profits.
Jeff, I've received that same question about 5 times just today. Because some of our larger clients who have, significant resources outside of their own operating capital want to know, does that disqualify them? And that's going to be on an individual bank perspective, because these banks are going to be the ones lending this money and therefore having to monitor very specific things to ensure that the forgiveness piece is taken care of. So it will be up to each individual bank to determine whether or not that would be a disqualifier or not.
There are additional regulations coming, right? So some of this is likely to be addressed.
Right. So let's go move on. We're going to ask our presenter. We're going to try to do as many questions as we can in the next 5-10 minutes. So a lot of questions about, I'm just taking a look, banks requiring, Brian, maybe, will bank require a credit score? Will they go through the bank website or the SBA website?
So with the PPP program, you will actually go through and apply through the bank, not the SBA website. That is the other program. So this specific program is designed so that the government is going to take and allow the banks to perform this action. And from the last time I saw, and tell me if I was wrong on this one, but there was no personal guarantees on this, correct? Yeah, so therefore we wouldn't be taking a personal credit score at that time. We would probably be looking more at a Dun & Bradstreet or some type of ability to repay to make the decision on whether or not it was approved or declined.
Okay. Another question that's asking for owner information. I think for not-for-profits, I would say they just put none. Is that correct?
Yes, that is my interpretation. And there's going to be a comment section, I'm sure. And because it's a nonprofit, they'll understand, that there's not going to be an ownership structure at that point.
There's a couple questions about the application process. What about documents? I think Ryan, it'll probably be pretty standard, but each bank does have the ability to tailor some of their own documents. That is correct, right?
That is correct. So there will be a very specific standard of what the government requires, and then each individual financial institution could ask for more additional information above that.
Okay.
And that's why it'd be important to call your financial institution once that has been addressed with government, and then getting to know that immediately.
Okay. Brian, I know U.S. Bank is is an SBA preferred lender. Are they listed on the website anywhere? Do you know?
Yeah. So, like I said, there's 1,800 specific lenders that are on the SBA website that are preferred lenders. But the best thing to do is to contact your lender to find out if they are an SBA preferred lender. Because some are SBA lenders but not preferred lenders, and probably will not be participating because they won't have the infrastructure to handle the amount of applications being taken.
Okay, thank you. Okay, the question, yeah, you do count part-time and full-time employees, correct? I mean, in the calculation. Sorry, I'm going through these kind of quickly. Okay. Oh, good question, because we actually have this situation. Can you apply for future employees to which you have extended an offer for employment? And so what is the deadline by which they need to start?
So again, you're basing this off your wages over the last period of time. So they're not employed yet. They're not going to be in that wage calculation. It's actual wages paid. Once you do start employing them, I guess if they're replacing somebody or whatnot, I wouldn't see an issue there. But again, talk to your banker. If they're replacing somebody, you should be fine. If they're a brand new add-on, as long as it's just this one person out of 100 people, I don't think that's a big deal.
Okay.
Don, I see another good one. We found a preliminary application on the U.S. Chamber of Commerce site. Should we fill that out? And last night, the SBA put out if that's the application you're looking at and it's linked there, the SBA put out a sample application. Brian, I believe banks will all develop their own applications, right? But the sample by the SBA is probably a good place to use as something to get ready with.
Absolutely. So that application was just sent out to us today just to review, and it's a standard part of a standard 7A application anyway. But each individual bank will probably have their own. Some of the smaller institutions will probably just use that version of it and then handle them on a physical basis versus a digital basis. But like our institution, we'll be creating a web group just to deal with these applications.
Okay, thank you.
Can I make one comment real quick?
Yeah, sure.
Yeah, so one of the things that I would encourage everybody to make sure that they have a detailed information for is their payroll report information and getting down to the line item on that situation, so that some of these institutions are probably going to require a lot of that information. And that's one thing that they can start preparing for now before we know exactly what is coming out and what's required.
Okay. Somebody asked is there a deadline for getting started? I'd say yeah, start right now to get things prepared. But is there a deadline for filing?
Yeah, I believe it's June 30th is when the program is scheduled to end.
Okay.
But to Brian's point, it'll be long gone before that, don't you think, Brian?
Yeah. Okay. Question: if we succeed in getting a loan, what are the terms? Are we required to repay monthly until we get the forgiveness, or payments deferred?
Brian, go ahead if you want to take it.
No, I know. I'm just reading off the SBA website. The loan has a maturity of 2 years and an interest rate of 0.5% is what I was looking at. Do you have any other information other than that?
No, those are the two that I have, and I believe the deferral on these is 6 months, and the conversion from loan to a fully amortized loan is going to occur after forgiveness, right, Brian and Jeff?
That is correct.
Okay.
Another terms question that has come up is whether the payment of interest is deferred, but do organizations still have to pay interest?
It is going to, so here's my understanding, and correct me if I'm wrong, but I believe when the loan is issued, there will be deferral for 6 months. Interest will accrue. The portion that is forgiven, the principal and interest related to that will be removed. And then I believe it turns into a standard debt obligation from the SBA.
So the interest gets forgiven along with the loan for that 6 months or however long it's outstanding.
Yes, I believe so. And correct me, Brian or Jeff, if I'm off on that one.
Well, the
No, you're
statute
correct.
reads like the bank actually or the government reimburses the bank for that interest.
Okay.
Correct.
We've had a couple of questions, and just if we could hit quickly, what happens if somebody voluntarily resigns in that window? So when you do the test back, they've left on their own, but they're no longer employed. How does, I know it's kind of a specific question, but I've seen it 2 or 3 times already. What do you, initial thoughts, quick answer to that? What do you guys think?
Or if you fired someone for cause, I've gotten that question too.
Yeah.
Wasn't there a 90% rule where you're within the 90% of that 12-month period in order to get that forgiveness? Am I mistaken
Okay.
there?
I haven't seen the form. I think so. It sounds like a specific question. I think unless you guys have a quick answer, I think we'll move on. I think it's one of those. Fortunately, it probably requires more research. We'll take a look at it, and when we put the questions out, we'll try to have a little more information in the answer there. We're still responsible for. Oh, sorry, I'm trying to take a couple more.
Yeah, there's one out there, Don, if you don't mind. I think.
Yeah, go ahead, David. Yeah, go ahead.
So this one come up. If we submit for reimbursement for the emergency paid sick leave or emergency FMLA,
good,
are we excluded from obtaining this loan? One thing I do want to point out is right now, Paycheck Protection, EIDL are really at the forefront of the stimulus. What is going on in the background is a lot of industry-specific tax credits, as well as broader tax credits related to FMLA, unemployment insurance, et cetera, et cetera. So aside from the SBA, Jeff, I'm sure you guys are spending a tremendous amount of time on the tax aspects of this. Borrowers under the PPL who are seeking forgiveness for wages and other expenses need to make sure they're communicating with their tax preparers and tax professionals to ensure that they are not double dipping forgiveness on wages that are also being applied for tax credits and other subsidies.
Okay. Okay. Thank you.
Jeff, I don't know if you have anything to add on that or not, but we've gotten that question a lot.
Yeah. Just don't double dip, basically.
Yeah.
But you can do, you can do the sick and FMLA. You can also do the PPP. You just won't mix them together, but you're getting into the details, but you can do them both. You just don't double dip.
Right. So I think the final question that I'll put out there. So can you talk about briefly about the terms of forgivability on the loans?
Sure, I can hit that real quick.
Sure.
My understanding is the forgiveness is going to be application based. So again, using those proceeds for the eligible expenses that we've discussed over an 8-week period, you will submit a quote unquote application or form to the lender who provided the loan, along with documentation of how those monies were spent. And then I think it turns into a conversation between you and your lender. I believe the decision time frame is about 60 days, and then they're reimbursed by the SBA on the amount that is forgiven.
All right. Hey, Brian, did you want to talk? You and I talked a little bit about that. Yeah. Did you want to clarify about the bank's how the bank's due diligence process is important here?
Yeah, so in order to make sure that we get reimbursed by the Treasury Department, we have to follow some very specific guidelines, and those guidelines, of course, are being created right now for us, and we don't know specifically what those guidelines are. But we'll be following a due diligence period throughout that period, making sure that these funds are being used exactly the way they're supposed to be, and then are they continuing to improve their payroll or keep their payroll, and how that's working. So there will be a lot of conversations going back and forth throughout the term of this to make sure that the forgiveness piece gets taken care of and the banks get their money, because that's what happens. is the Treasury Department is going to give us the money to relieve some of this debt.
Okay. Okay, thank you. So thank you for all your questions. We've been tracking the questions, and we will do our best to provide response and put them on the website within 24 hours. Some other resources that I wanted to bring forward for United Way organizations. Tricia Gordon, Vice President of Community Investment, has volunteered to be a resource for you. For Jewish community organizations, please send questions, support requests to cares@jfedstl.org. And then, as I mentioned, content from this video conference will be posted later today. We probably won't have all the questions up with answers, but it'll probably be more tomorrow, but we'll get content on the website as soon as we can. I want to thank our presenters. I want to thank Jeff Sparks, David Killian, Brian Phillips, and Kate Dana for taking the time today. I know you've all been swapped, as everybody has. I think this is a new program. It really is a program that helps support organizations. So I encourage everybody to take a good look at it. Thank you from the Jewish Federation of St. Louis, and we're here. And if anybody needs anything, just let me know. Thank you, everybody, and have a great day. Thank you.
Thanks for having us, Don.
Have a good night.